Hello everyone, I'm Dr. Stock, and in this video we're taking a technical analysis look at the SPY and the Qs and also talking a little bit about the influences from GDP, jobless claims, PCE, and consumer sentiment that come up today and tomorrow in the markets at 8:30, 8:30, and 10 a.m. And I'll go over those details in this video. Real quick, take a look at this offer. It does expire tomorrow. By using the link down in the description, you can get up to 17 free stocks. By signing up and opening an account and depositing $100, you get 7 free stocks, 2 AI draws, and then 5 free stocks valued up to $2,000 a piece. And if you deposit $1,000 or more, you get 17 free stocks. That's still those 2 AI draws plus 15 other stocks, still valued up to $2,000 a piece. And if you guys like the commentary in this video, check out the link for the Patreon down in the description. Be a member of my private Discord community and be one of my community members. Interact with me and them throughout the trading week. Now, we're looking at the SPY here. So on the SPY, you can see we've had quite a run of it, and we're coming up about to where we leveled off. Only at its best did we go about 4% up above the 400 mark, just about where our previous close was at 401.35, and that was quite a day. As a matter of fact, we mostly leveled off right around that 413 mark, and that's significant because that's about 3% up from where we're at, 4% to this peak that we have here. So that would be the ultimate bullish case, and I don't think that we would see that this week unless we get really strong GDP news, amazing initial jobless claims news, PCEs, a PCE that came in super low, personal income that came in somewhat moderately good, still positive, but not super strong on that front. And then finding out about consumer savings, that consumers have not started saving a whole lot more, although maybe in the face of inflation, that could be a positive catalyst for us. We're going to have to watch that. And also, we would have to have incredible consumer sentiment. And with the banking stuff that we had going on, I don't know that we'll see that yet. So I think more likely, we can end up between about 406 and 412. So we'll see if we end the week around there. Now, my initial sentiment on this from Friday of last week, I was bearish on this week. However, the market so far has proved me wrong. We'll see how it finishes it up. So on the way down from that, we do have the 50-day as support right around that 400 psychological support as well. So that could be significant for us. At the very worst, I think that we would be right around that 390 mark. I don't know that would happen. I think somewhere being in no man's land in between the two would be more likely if we get a GDP that revises downward. Jobless claims maybe come in a little bit higher. That shows that we're starting to see some weakening or some loosening in the labor force. That could also be something that could put downward pressure on the markets. And then there's also PCE, if that comes in hotter than expected, or if that comes in, I think even if it matches what we had in January, that can still be downward pressure. And it is closely tied to the CPI, which wasn't great for us. So the PCE coming in around what the CPI did would be expected. Not a lot of impact on markets. Coming in hotter than expected would certainly be downward pressure on the markets that the Fed is going to have to do further tightening. And right now, it's that expected pause from the Fed that is allowing the markets to rally the way that they have. So, hey, banking stuff, hey, cleared up. Fed pausing sooner than expected. Woo! All right, let's start moving upward. And if we get rate cuts this year from the Fed, that can also be something in the face of inflation still moderating that allows more levity to happen in the markets. So, bringing back the SPY just real quick, and then we'll jump over to the Qs. Come on, there we go. All right, so we have room up to, there's about the 408 mark, breaking up above 416. We're going to have really significant resistance right here. So that's something I think in the near term could be holding us back. And then retesting this previous high at 425, which would be right around the 4200, a little bit above the 4200 mark that we would have. That I don't think that we can break unless we get excellent guidance coming through Q1 earnings. Well, Q1 earnings themselves being strong, and then on top of that, a really good outlook for the rest of 2023. A strong outlook is going to cause this bear market rally that we've seen to turn into a full-on bull run, in my opinion. So we would have to have a wealth of information that would allow us to make that sort of run, and I can cover that more in another video. Let's jump over to the Qs before I'm out of time here. The Qs, we are sitting pretty much right at resistance in the pre-market hours. Actually, we even made it up, I believe, to 315, which ties this previous high that we had during regular trading hours just a few days ago, coming in at, let me see, what was it? 315.25 was the high price that we had. And then just peekabooing up at that for just a little bit before closing much farther down from there. And so now we're trying to push up on that again. And we'll see today, again, with GDP, with initial jobless claims, with funds, if we have the VIX continuing to drop or to stay low, those are all things that can really help us out. And we have room up to about that 319 level for minor resistance. And the major resist, in my opinion, comes up to this previous high around 330 to 332. So we'll see that. I think 330 is actually that better line that we would have for that resistance. And that would still be very significant because that can be about 5 to 6% up from where we currently sit in the markets. So I don't think that happens this week. But it is possible this week that we do end up green in as long as we don't get any red lights coming out of GDP, PCE, consumer sentiment, initial jobless claims. If everything continues to look calm, expected, those are things that I think allow the money to keep flowing into the indices, and we'll have to watch and see if that happens. So as banks continue to regain strength, that's something that can help out the markets, saying that there is strength in the banking sector, a lot of confidence to still be had in the banking sector. There was a few small regional banks that had that trouble. I am still concerned. Let me wrap this up here. I am still concerned about the outlook for the rest of 2023, especially as we get into Q3 and Q4 with student loans picking back up. I think that's where the big drag on the economy comes in. So it is possible we see that as early as Q2. We're going to have to watch and see what gets said there. So we're going to have to watch inflation. We're going to have to watch what the Fed does with their federal funds rate, if they continue to tighten, if the market continues to rally, if the consumers continue to be strong, if inflation holds steady, we can count on a few more rate hikes before the Fed finally pauses. And that's especially if credit conditions don't continue to tighten. That's if credit conditions in the banking sector don't necessarily need to tighten because there isn't as much systemic risk. There's a lot of factors. I'm going to have to lay it out in a future video talking about each one of those things in detail. I do have my eyes on CPI, which I believe is April the 12th. That's going to be very telling for us, more so than what we get from the PCE tomorrow in the markets, and then also PPI that follows that. So middle of April, on top of that, compounded with Q1 earnings starting to come in and forward guidance starting to come in as well for the rest of 2023, given that Q1 will finally be in our rearview mirror, there's going to be major impacts to the markets. And I wouldn't be surprised to see volatility pick up prior to that time in the few days leading up to CPI and PPI, and also the start, especially of the big bank earnings. So thank you guys for watching this video. If you want to hear more of my commentary, check out that link down in the description for the Patreon. If you want to get a hold of your free stocks, that offer does expire on March the 31st. That is tomorrow as of the recording of this video. So click the link, sign up, get your free stocks by depositing your $100 or more. You're supporting yourself, and you're also supporting what I do here on this channel, and supporting my family. Thank you for all the support that you show, even if it is watching this video all the way through. Click the like button if you like this video, hit the subscribe button to see more of my content, and ring that notification bell to see anytime that my content comes out. I am Dr. Stock, Doctor of Education. We'll see you in the next video.